Hello, everyone, and welcome to Richard Hart, the Bitcoin bear case. We're going to take a deep dive into the charts and understand why Richard Hart is bearish. He has a target of 10K. Right now, we're sitting at roughly, I think 46K, 47K. And we'll also take a look at the bull case and where we can go and what to sell just by looking at the charts. So if you're following Bitcoin and its trend, or you're looking to trade it, this information is definitely for you. So let's flip it to the chart. But before, remember, this is not financial advice. This is education, and for entertainment purposes, I wanted to show you, how I'm perceiving the charts through, my knowledge of technical analysis and trends and cycles. So let's dive into it, shall we? Here we have a chart of Bitcoin. Let's take a look at this, right? So you can see I drew 3 boxes here, 1, 2, 3. And we're on a monthly chart. So we're looking at past behavior, and we're seeing that every bull run is roughly, 730 days to about 800 days, roughly in that range. And we're doing that by grabbing the bottom to the top, from the bottom of the breakout to the top, from the bottom of the breakout to the top. So if we're looking at around those time frames, it actually looks like we're done the bull run, right? It really, really looks like it's also on the monthly chart. What we have here, I just want to zoom in here for you guys. We have a doji. It's a very small, almost doji-like top here, and then a breakdown candle. So we can absolutely, these things are lining up. The time frames are lining up. The candlestick patterns are lining up. I'm not a big fan of candlestick patterns. I don't really trade them. I just trade price action. And if you take a look at my gap trading and short selling trading videos, you see that I get in at price points and not necessarily technical patterns. I don't use no MACDs, no stochastics, none of that stuff. I really keep it simple, and it really works. So less is more, okay? And the reason why he's saying 10K is, and this falls in with, my fundamentals of technical analysis is, we retrace previous breakout areas, and this is the last low of that breakup candle, which is 10,780. Let's see here, open 10,780. And let's see in the past, have we ever retraced to that point, to a previous breakout area? So here, it would be roughly here. We didn't, right? This was, on a monthly basis. When we did fall back, we didn't hit the 1,350. We're at 4K. So we may not come back down all the way here if we look at previous, price behavior, right? It didn't quite fall back to those previous breakout areas, but I think we maybe we're looking at retesting the previous highs, right? So maybe here 20K. If the bear case is valid, that's the reasoning behind his call right now is, look, these are the cycles. They last around 800 days. The 800 days are up. After that, it's followed by a year and a half, 2 years of a bear market, and then we resume the bull market. But if we look right last year here, we didn't fall quite into that year and a half, 2 year mark. We went from Jan to Jan, Jan to Jan, and then we hit the bottom, and from there, we started our upwards trajectory. So if we move this goalpost, right, if we're in a 2 year bear cycle here, 2-3 years, then we should be moving this to we should be moving this up a bit, right? And if this is the case, then we still have some room to go here, right? Which would line up with, see, this is the bull case, okay? If really, this bull run is a little bit more bullish than previous ones because we started earlier, then, we're looking at ending in March, at the end of the year, more than, than it has already ended. And that would line up with, the time frame. So the Christmas rally, which is December, January. So that the highs, the end of the bull runs were in December, November. So we are undecided. Are we going to hit our 100K mark this year? It's possible, we need to take out these highs. This doji and this breakdown candle, we need to take them out and start closing above this one, like 60,000, 65,000 range. So let's flip it to a daily chart here. And so we can get a better idea, right? So yeah, we need to take out these highs of 63,855. We need to take that out. Otherwise, the bear market is still, the 10,000K, as Richard is saying, is in effect. But, let's argue both cases. There is a possibility that this is just a pullback. So if we flip it back to, that monthly chart, let's zoom in a little bit here. This could be just, the first, there's an Elliott wave, there's a 3-wave pattern, right? So you have 1, 2, 3. That's, definitely possible. I'm not saying it's going to 500,000. Maybe it'll probably most likely go to about 100,000 by year end, if it goes there. But that's the two case. Either we're going to 100K or we're going back to 10K. We need to take out these previous highs, and it really depends on when you start. The bull run cycle. Is it did the bull run cycle really start in March of 2020, or did the bull cycle run start in 2019? That's what we need to, that's where there's some gray areas there when those cycles start and begin. So thank you for watching. Hopefully you learned something. See you tomorrow.